Good evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, the 13th of November, 2019, just after 4:15 p.m. Central Daylight Time. So in looking at the markets, I don't know if it's Central Daylight, I'm just going to call it Central Time. In looking at the markets, the stock indices, a mixed day. You've got the S&P and the Dow acting strong. You've got the NASDAQ that backed off. You got the Russell that has backed off. We were up in the gold and the silver market. Interest rate futures saw a bid come into them because once again, it appears, at least from the press, China is balking at doing a trade deal. It's the old issues of how much they have to buy of U.S. agriculture, forced technology transfer, and enforcement of the deal. Apparently the sides are not close together. I realize Larry Kudlow is saying the opposite. I'm telling you what I'm reading, and yet the stock market hung in there. I seriously doubt that President Trump is going to go forward with anything there in terms of releasing anything till he gets pretty close to what he wants on phase one. Then we've got to worry a little bit about tomorrow. It's a self-imposed date on vehicle and auto part tariffs from, I believe it's parts of Asia, South Korea, Japan, and of course the European Union. I don't know if the president needs all these battles at one time. We'll see if he doesn't delay that a little bit, but I know there's been nothing from everything I'm reading done to say, hey, a deal's been struck on that. So let's look at the S&P, and all you can say is, again, new highs. 30.95.50. I read lots of newsletters, and they are pointing out that the market is ahead of itself, overdue for a buy. It's been here in some of these indices, and not in price, obviously, but momentums of indicators, and I get that. You certainly are, and you can get a correction at any time. The problem is the longer we go, we get closer to that Santa Claus period of time, which I think we're in anyways. As you can see, you're getting distribution on a bar chart here. So we go up, we back off, we hold. That is now the first sign that the market, instead of just going to the upside, it's starting to stall a little bit. That I give it. What has the market got? It still has the pattern of higher lows and higher highs. So until it's over, it isn't over. Number two, remember I told you, if you look at this chart as an inverted head and shoulder, you can make an argument that if you picked up this part of the head, and it's not the prettiest head and shoulder, but if you picked it up and flipped it over, you end up in that 3160 area. That does not mean you have to go there. It doesn't mean we can't get a big break in November, but it's called a count. And that count is still very much in play. What's been going on is the 18-day average. We haven't even come down to test this market now in better than 4 weeks. You can see when you came back, and once you got over it, you held it, and you've stayed very nicely over it. And the market is now going sideways. If it decides to go up, the Bollinger Band next resistance is 3120. So I would say that to keep the pattern and just not lose the bullishness, you don't want to see 3072.5 taken out, but to me the most important thing is you have an embedded reading, and until it's lost, I say that the pros are buying each one of these breaks looking for higher prices. I'm going to say the same in the NASDAQ. Embedded reading, the pattern higher lows, higher highs, the pause and the sideways action suddenly, but if the market gets any piece of good news, 83.80. Remember, tomorrow we have Fed Chair Powell also speaking before the House Budgetary Committee. Today, I did catch parts finally out of what he was saying on the Economic Joint Committee. It looked all good to me. I mean, he's in a sweet spot as I see it, and he's got the economy in a sweet spot. When you look at the December Dow Jones, flat in the embedded reading, new highs. This market had an outside day up. So now I'm watching this. I wouldn't want to see today's low taken out. It could be a sign that upside momentum was waning because you have the outside day up. I have a rule that says if you take out the low of an outside day up, within 2 trading sessions of it being created, that's today, that if that's hit, it's not uncommon for price in the 18-day average to make a run at each other, so that would be a further break in the market. Just something I want to point out there. In the Russell, I was looking for, when you lost the embedded reading, and I admit I'm disappointed in this market. I thought it would break to it quicker, for price and the 18-day average to make a run at each other. I think that getting within less than a full point, you heard me, Today's low, 1579.70. If you look at the 18-day average, it's 1578.90. So, like, what are they, 0.8 apart? I don't care if it hits it or not now. It's made its run. And I thought it would break more than that, but what's happened is because it took time, the 18-day average is continuing to climb. This market is the weakest of the stock indices that I'm following. The VIX got more of a pop, and you would think with more of a pop in it, you'd get a break in the stock market. You didn't. It ended up finishing at 1304, right on the 18-day average of closes. So the pop gave way, and you couldn't even hold the gain. Market had lost its embedded reading. I was looking for the 18-day average. It all happened at the same time. T-bonds. Well, market's oversold. You've negated this down leg. That does not mean that interest rates can't reverse and figure out a way, but you broke the pattern of lower highs, lower lows. As far as I'm concerned, this leg down is over. I would not be surprised that the market finds its way back into these two numbers to try to figure out what to do next, maybe off just some short covering. I see no reason to be long, by the way, these. And now I don't have a reason to be short. I had been bearish. Same thing goes in the 10-year notes, same exact pattern, looking for resistance up there. When we come to TLT, same pattern. You've now got a market that lost, and I want you to see there's a reading of 20 here. I got to come back to it. Now I can get to it. The other reading, both under 20, but not. Just oversold markets. And that's all that you've done here. I'm looking for resistance. If it does get more short covering up to this area, I don't see a reason to be short nor a reason to be long. And yes, I'm going to argue. I think that down leg ended just like in the futures. In the dollar index, we just keep going sideways against this Bollinger Band. But as that's occurred, the question is, will we get an embedded reading here? Both numbers are over 80. That's the key. You got to be over 80, but you got to do it several days in a row, and you haven't done it yet. So tomorrow's an important day. The odds favor it won't embed, but we'll see what happens. If you take out 97.57, it would be a sign that this up leg has come to an end, but I don't see anything here other than the market being overbought, reasons to be short. In the eurocurrency, will we develop a bearish embedded reading? Well, let's see. Both numbers today were under 20. Both numbers yesterday under 20, but not the day before. It's the flip-flop of the dollar. I'll wait and see. More times than not, you get overbought, oversold, and you bounce away from that or turn down from it before you embed. British pound, lower highs, higher lows. I don't see a thing in this market. I see resistance at the 18-day average of closes and a stall in momentum. Japanese yen, this market lost its downtrend. Now, that happened with today's, you don't see that here. I'm going to show you today's action. If you take out this high, you've lost it. Now you got higher lows, higher highs, right back to that 18-day average. That line in the sand is the market now neutralizes the downtrend. Bitcoin just hanging at that 18-day average. The pattern is one of lower highs, lower lows. If you take a look at this low, it's 85.55. Let's see if what this low is, 85.60. So you've got the lower highs, lower lows. Sometimes you got to do that on the charts because visually it looks to me like that's higher, but I won't worry about it right now. I don't care. In the Brent versus WTI crude, you're still staying under that 18-day average, which means the differential between the two is more prone to narrow than widen. Get over it, and that's when you start the widening process. Not there. What has the market done? It's developed a pattern of lower highs, higher lows, back to the 18-day average of closes. It keeps holding that, and it's overbought as can be. In the WTI, that was the Brent. WTI, you've got the higher lows, but lower highs, overbought as can be. Not quite as weak, couldn't make it to that 18-day average, but let's assume that the market even takes out these recent highs, and that could easily happen off tomorrow's EIA numbers. You still have that Bollinger Band to deal with. One of the things the market is looking at is today OPEC came out and they're now saying they've recalculated and they think there'll be more demand going forward than less. I don't think that they saw China and the U.S. today make this talk where they're drifting apart, not getting closer to a deal. I wonder how much of that has to do with the hearings on TV and the Chinese deciding, oh, we can wait a little bit here, the president's under pressure. I don't know. Gasoline market still fighting every day at the 18-day average, but the trend is up. You have higher lows. You had a big reversal day today. So until today's low, and this is brand new on it, that's your outside day up, and it created this higher low. Until that's taken out, I'm going to look to see if the pros aren't going to be buyers against that 18-day average. If the market decides to move higher, one of the zones that I'm looking for resistance, 166.50. In nat gas, I think the combination of the 18 and the 100-day average is enough after this big break to sort of stall this market out. Warmer weather is on the horizon. I mean, it's been horrendous. I'm getting a cold from it, in fact. But the question is this market got enough to just propel down from here? I've got my doubts. I think the pros are taking money off the table right in this range. I want to remind you, we cover these markets in written research all through the day. And you get to pick if you're a client of ours, and if you're not and you want to try our information, you can take all the research or pick the categories you want, because they'll go to your email box. And of course, you can view this if you have our QT platforms, be it the mobile ones, the tablet ones, those that work on your different computers. You'll see that it comes in, and the information we write is written for commodity traders. And we're going to tell you who's buying what in the pits that day. We're going to tell you what we're seeing in the options, how many spreads are being done one way, carrying charges if you're trading certain things. If you're in the financial markets, what are we seeing going on in trade talks? What are we seeing going on in all the stock indices? There's an awful lot of information here. How do you get it? Because there is a free trial. Give us a call. You can go to our website. On the website, as soon as you go to it, you'll see Ira's free offers. Click it and fill out the ones that you'd want. You can click up here if you'd like as well. It'll take you right to that page. I'm Ira. You have a great day, and I'll see you tomorrow.